Hello and welcome. I am Shuja Qureshi and you are watching Business Pakistan. Pakistan's stock market, after being one of the best performing market in the last few years, witnessed declining trend in the last few weeks. Market was down and picked up following some measures taken by the Securities and Exchange Commission of Pakistan, which regulates Pakistani market. Our correspondent Ahmed Mukhtar has talked to the chairman of the regulatory body, Securities and Exchange Commission of Pakistan, on the market situation and its future. Let us see what he has to say.
Hi viewers, Pakistan's current political and economic situation has been quite uncertain in last 1.5 years, and that has impacted on overall stock market and overall economy too. We are going to discuss it with Chairman SECP, Razia Rahman Sahab. Razia Sahab, welcome to CNBC Pakistan.
Thank you.
Recently, in last few weeks, the local market went down like 30% and then it just recovered. Do you see any role of regulator in that, and what measures you did for that?
Well, basically, since the market was more or less in a free fall situation, we had to take some corrective measures so that this market has a bit of cooling period where the investors and the stakeholders have time to think. For that, what we did was we reduced the circuit breaker, the lower circuit breaker, to 1% as opposed to 5%. And the upper circuit breaker was enhanced to 10% from 5%. In addition to this, now this was primarily designed to give breathing space to the investors and enable the investors and the brokers to arrange funds to meet their margin calls. So that was the main reason, and I think the actual events proved that this was the right decision at the right time, because the market has picked up from here.
From this point, it seems that market is facing some issues of liquidity or the financing.
Yes, certainly there is a liquidity problem, because as you know, the State Bank has raised the interest rates recently and has sucked out liquidity from the market through various open market operations, which meant that the money available to the stock market was more or less drying up, and availability of money or funds for margin calls was getting limited. That was one of the reasons as well. The other factor that we had was that we had a situation where we were being subjected to certain amount of market manipulation by short sellers in the futures market, and therefore we banned that for the futures for the July contract. But we have a capacity to short sell on the ready market and also on the cash settle market. We didn't tinker with that.
Right. And were you anticipating any such event like that previously, and had you taken some other strong measures or some risk management measures before that, so that such situation could not arise?
Well, as you know, from 2006 we've had a series of reforms. We've changed the risk management system, we've changed the amount of margins that the brokers have to pay. We've got financial institutions paying their own margins, and brokers are not dependent on their own resources for meeting the margin calls for financial institutions. We've also got special margins to cater for any steep upward or downward rise in the stock market. So we've taken a lot of these measures, and above all, as far as the futures market is concerned, we had certain fixed limits on which the market can go. For example, the total futures market could not go beyond 40% of the free float of a particular scrip. No individual investor can invest more than 1% of the free float as far as his selling positions are concerned. And a broker, cumulatively for all his clients, cannot go more than 5%. So these measures have been taken over time so that on a long-term basis, the market is not subject to such turbulent times. And you would see from March 2007, when we've been having a spate of political issues coming up at regular intervals, the market behaved fairly normally and was not subject to very turbulent times. But now, obviously, the number of things came into focus at the same time. We had a situation where the regional markets were facing a situation where inflation was high, money supply was restricted. To curtail inflation, the bank rate was raised. all of the regional markets had similar. When all the regional markets, the stock markets went down more or less the same amount as we've gone down. So there was nothing abnormal. What we had to do was to stem the drop, keeping within the market constraints. That's what we did. We did not break the market rules. We tried to contain it by making the minimum changes that might be necessary to give it a breathing space.
In this recent scenario, people were also, analysts were also saying that the foreign investors were also either reluctant or they were withdrawing their investment. Was it so?
Well, what we've done is that we, on a daily basis, we monitor all the foreigners' sale. As you know, we have a UIN system whereby we can track every investor in the stock market and can look at his entire position. So what we've done is we are tracking all foreigners, which may be fund managers, it may be Pakistanis living abroad, all foreigners who are not based in Pakistan, we're monitoring them. And we have seen that over the last, I think, 4 or 5 months, the amount of money that has gone out of the country from the stock market is only about $130 million. The total investment, short-term investment, portfolio investment that we have in Pakistan is, on today's prices, about $5 billion US. So 130 million or 140 million out of 5 billion is a small dent.
Right.
This 5 billion is about 25% of the free float. So again, it's not a very large sum, and this investment has been there. So it's not as if a lot of money is flowing out.
Pakistan is located near the Middle East, where we see each new city is being developed, Abu Dhabi, Dubai, and now Ajman. And we have been seeing or hearing that even local investors, when they were more interested in local market, when the economic situation was not so good, political instability was there, so investors thought that it's better to invest there and there were better margins or dividends. Do you really think that our investors was really going for another better opportunity than Pakistan, which was once one of the topmost performing market in the world?
Well, quite frankly, every investor has to take his own decision as to which is the best venue for him. But in my opinion, with the price of oil going the way it is, naturally the Middle East, which has a large proportion of the reserves of the world, their revenues are going up, they have excess money, and they are looking at ways to invest it. Now they're building properties, building the cities, but for that they'll need to attract people to come in and work over there and make a living. And when that music stops, this property will, so hopefully that music won't stop. So that decision of Pakistanis to go invest there is really dependent on their view as to how long the music is not going to stop. And that's their decision.
When the last comment was going out, we were thinking or we were listening that or hearing that the market could go at KSE 100 index 18,000 points, but it actually came back due to a number of factors. And now people are saying that it could stay between 14,000 or 12,000 index, and it's largely depending on the factor. How do you see future of the market?
See, before the inflation worries came in, before the oil and the food worries came in, the markets were trading at 18 or 19%. We've been traditionally trading at 10 to 12 times the multiples.
Right.
So there's a big gap that the market in Pakistan can take if you have to follow the regional markets. World is becoming a smaller place, and therefore investors are investing in various countries. Now either we link up with other trading platforms or whatever, which is going to happen fairly soon. You'll find that foreigners are going to be looking at Pakistan just like they look at any other investment in their own backyards. And consequently, I do not think that there is really there's a lot standing between multiples of 10 to 12 and multiples of 14 or 15. 12 to 14, I would not hazard a guess, but I would say that yes, we are looking at that range, and which is not too much for the Pakistan market.
Thank you very much for being with us on CNBC Pakistan.
Thank you.
After successfully deregulating the telecom sector through different policies, the government now envisages implementing a uniform telecom policy from January next year to further strengthen the role of private sector in the booming market. Our correspondent Amir Syal has more details.
The local telecom sector was open for competition in 2003 with the implementation of telecom deregulation policy, which paved the way for the mobile telecom policy and followed by the broadband policy. All these policies were implemented for a 5-year period which expires this year. Federal Minister for IT Qamar Zaman Khaira, addressing a telecom summit in Islamabad, said a new uniform telecom policy was under consideration to address all the issues of the ICT sector. He said that all the stakeholders were involved to draft the policy. The new policy will be implemented by January next year. With teledensity above 50% and majority of people looking for data connectivity on their mobile phones, multinational telecom vendors are interested to offer WiMAX, 3G, mobile TV and other value-added services solutions to the local fixed line as well as wireless companies. They see immense scope for investment in Pakistan.
When more of the people can afford telecoms, which is going to happen eventually, that the size of the market will double. So the given impact of the telecommunications industry today from FDI and the progressive regulatory policies by the regulatory and the ministry groups have provided us a situation that we're going to be, here in Pakistan at least, a very strong.
The future of data connectivity and other value-added services is dependent upon the scarce resource of spectrum. The government has plans to auction 3 spectrums for 3G licenses in the 3rd quarter this year. Amir Syal, CNBC Pakistan, Islamabad.
It's time for a short break now. Keep watching Business Pakistan.